Hello, everyone. Welcome to Live Trading Thursday. I'm excited to be with you today. The market has just been absolutely crazy. Some interesting stuff going on. We're going to be going over that. I would love your participation today. If you want to go ahead and throw your tickers in the comment box there, both Facebook and YouTube should have that. Love to go over any trades that you might be looking at, any trades that you might be in. We've only got a short time here, about 15-20 minutes together, so be sure to get those tickers in quickly so that we can have the time to go over those together. Do want to let you guys know that all of these examples in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice at this time. So guys, let me go ahead and share my screen here. There we go. Here's the overall market. So a lot of interesting things have happened since we met last. So last week, Thursday, we were looking at this candlestick, and honestly, I was a little surprised at how strong it finished that day, above the 10, and I personally expected that we would then continue up to the 200 and maybe fill there. That obviously did not happen. Look at Friday. What a statement. 140 points down on that day. I was looking back. It's like, wow, is there another candlestick that is as big? Maybe that one back there, maybe some of these. It's tough though. That is a massive candlestick, and that was a big statement. The statement is the bear market is not over. And look at this. It wasn't just a one-day thing. Every day since then, we've been down, down, down. Today as well, a gap down, and then down some more as well. So, I mean, last Thursday, we closed at 4,200. Now we're down 300 points from last Thursday. So anyways, how does that play into what we're looking at trading wise? Well, obviously, if you know you can make money to the downside, there is that opportunity, but we've kind of missed it at this point, right? We would have had to get in sometime midday Friday when we're like, okay, yeah, that's heading down. That's when we would have been looking at a lot of these bearish trades. And if you had done so, that would have looked really good. You might already be out then with a pretty significant profit. But right now, if we were to get in, most bearish trades would just kind of be chasing the market down. And when things move pretty significantly in a certain direction, there comes a point where it might want to start to bounce up. It just kind of revert back towards these EMAs. And so right now would not be a great time to get bearish if you aren't already. What I'd be looking at for a lot of these trades is for the market to come back and then maybe bounce down off the 10 or the 20 or something like that. But just hopping into some puts right now is going to be chasing the market. So anyway, there are still some stocks out there that potentially could be good buy points for moving up. And we're going to look at a couple of those. Because if you remember, a lot of the energy sector has been going kind of counter to what the overall market has been doing. And if not exactly counter, then at least just ignoring what the overall market's doing and kind of doing its own thing. So we're going to look at a few of those to get started. But again, I'd love some participation from you guys. So go ahead and throw in any tickers or trades that you would want to look at, and we can look at those together. All right, first one we're going to get started off with today. I want to look at, here's an energy stock for you, Oxy. We've talked about this one quite a bit in the past. This is an energy stock that Warren Buffett piled into. We might have looked at this one last week even too. And well, why are we looking at this? It is down a little bit, right? But is it down too much, or is it getting, at a point where it's close to support? So the line that we can draw here, if we draw that line right there off of these 2 points, it looks like it's below. However, if we recognize that in this, let me delete this line now. In this area right here, it used the 20-day as support, and it has done that in the past as well. Potentially where this, wherever this thing closes, we could be looking at that as potential support. So if it were to close right on the 20-day and then start to move up tomorrow, that could be a good bullish opportunity for Oxy. So there are still some options, or I shouldn't use that word. There's still some tickers, some stocks out there that you could use on the bullish side. Aaron, thanks for being on today. I appreciate that. Aaron's wanting to look at HCC. Let's take a look and see what we can find. HCC, Warrior Met Coal. All right. Okay. So this is a chart that, is down a little bit the last couple days, but it's not like it's been getting decimated like so much of the stocks out there. Goodness gracious, look at the tech sector. I mean, stocks have just been falling off the cliff. This one looks like it's kind of holding its own. We could throw a line here. Oops, there we go. Let's grab a line. If we put a line there, we can see if the stock wants to follow that line, there's still some room for it to pull back some. So I don't know if I would want to jump into this one right now, but if it were to come back to that line and then bounce up, that could be a good opportunity. You might have a stock here that is, kind of in a shallow uptrend. But you know what? When you compare that to what the overall market's been doing, that's pretty solid, right? So let's see here. The volume on this one, probably about 1 million on average or so. So definitely good enough for stock trades. Might be on the rough side as far as options go. We can take a look and see real quick what their options are looking at. The liquidity is pretty decent, so that's good. They've only got monthlies, that's fine. So you look at the monthly, let's choose all the strikes. The bid-ask spread isn't awesome here, but it gets a little bit better. The open interest is decent. So as far as options go, if you were wanting to do an options trade on this, if it does come back to support and then bump up from there, it could be challenging, right? It could. Let's go out a little bit. Let's look at December, see what that looks like. Yeah, it's options might be a challenge on this. It's not as liquid as we would like it to be. But as far as the pattern goes, zooming out a year here, it's definitely been bullish in the last year. And, look at this. So the market overall started its bear market, essentially started heading down at the very beginning of the year. But what did HCC do? Well, it just shot up, right? It almost doubled in that time. So really good movement there. A little bit of a pullback here, but you know what? That almost might be expected at this point, right? Because it just had a really big run up and just doubled in price and everything. So you can see the earnings here. They've beaten earnings quite a bit. It's looking like a growth stock as well. I mean, right around this time last year, they made 97 cents per share. And the last earnings report, they made $5.87 per share. So some good things looking there on the fundamentals as well. You can just see the quick look on the boxes. Fundamentals has a green score. Insiders has a green score. So, that would refer to the big boys. Are they invested in this? So a good find there, Aaron. I like this one. I think we need to be patient on this one and see if it can come back down to this line, or if it wants to, if it were to start moving up from here, maybe it wants to make a new pattern. But there's a lot of things with this chart and this stock in particular that I'm really liking, especially in this market that just wants to tank. And HCC is kind of holding its own. All right. Hey, Mark Derby, it's good to see you there. Glad that you're on as well. Mark, if you've got any tickers, any trades that you would want to look at, go ahead and throw those in the comment box. We'd love to look at those for you as well. Same thing, Aaron. Again, thanks again for that great one to look at here. If you've got any others you want to look at, throw those in as well. Let's take a quick look at Pfizer. I thought this one was kind of interesting. Let me zoom out a little bit. So yeah, Pfizer's been getting killed here, right? But even on a big down day, what is Pfizer, or down day for the overall market, what is Pfizer doing today? It's got a big up day, right? And so this kind of caught my eye, because if you're looking at potential bearish trades, you're going to want to see something that has pulled up a little bit and then is going to start to bounce down off of an EMA. So maybe the 10 or the 20. So if Pfizer can move up some more either today or preferably tomorrow as well, and then bounce down off the 10, that could be an opportunity for a put, or maybe a bear put, some other bearish trade. But let's zoom out here real quick. Let's see where we are. This isn't going to be a perfect line, but you can kind of see this zone right here. That was resistance, then it was support, and now potentially support again. So we're kind of at this pivot point, if you will. And so the question is, which direction is it going to go? Is it going to bounce up from here and we can look at things to be bullish, or are we going to break through this line? So, initially when you look at this chart, you're like, okay, great. There might be some opportunities in here to get bearish, to maybe, ride down on a put once it bounces down. But then you zoom out a little bit, and you're like, ooh, I don't know if that's actually going to continue moving down or not. So if we can break this line and start to move down, it could be a really good opportunity for a put. And where could it go? Well, I'm looking at potentially these lows back in here. It's about the $41 range or so. That'd be a really nice move if you can get in at about 44 and then sell at 42, 41. That'd be a nice put move. But if this thing wants to start moving up and kind of just work in this range right here, well, then there's other opportunities that we have there as well. Let's look at the options real quick on Pfizer. I'm sure they're going to be a little better than HCC there. So there we go. Let's look at about, wow, I keep thinking that's a month out. It's September today, guys. That's only a couple of weeks out right there. Okay. Maybe we'll look at October 21. You can look at either of those, honestly. Since I clicked on it first, we'll look at September. But you can see here the bid-ask spread. Wow, look at that. It's just 2 pennies. So bid-ask spread is really nice. The open interest is really good. So as far as liquidity goes, something like Pfizer is going to be pretty good as far as the options go. So again, then the question is, we need to see what decision, if you will, is Pfizer going to make. Jody, it's great that you're on. I'm glad you're on today. Looking at UNG, let's take a look. Let's see what we can find. I love it when you guys throw tickers at me like this. It makes it a lot more fun because I can just throw tickers out there, but I want to see what you guys are looking at. Wow. Okay. UNG. Okay. This is, I see here. So this is probably a natural gas ETF, right? So it's not linked to a particular stock, but it's the natural gas sector, if you will. And so that makes sense that it would be up, right? Because it's part of the energy industry. And so natural gas is not going to get hit as hard. And as you can see, I mean, look at this. This is crazy move right here, right? I mean, if we were still doing what's hot, what's not, this might be a hot stock because, or ETF in this case, down at $12 earlier in the, well, right at the end of the year. So there you go. Very beginning of the year, about $12, almost has tripled now. And moving up again. Let's zoom in on what we got. So yesterday, it looked like it opened up at the 20 and moved up from there. And then today, it's up again a little bit. That's some bullish confirmation. Jody, you might have found the stock here that is at a pretty decent buy point to the bullish side. It's got plenty of volume as well. Remember, for stocks, we're looking at, at least 300,000 shares of volume. This is averaging probably 5 or 6 million. The options might even be good on this as well. Liquidity is looking decent. Again, we'll just choose a couple weeks out here to get a kind of a frame of reference. Bid-ask spread, not quite as good as the last one as Pfizer that we looked at, but not bad. Not bad. I mean, that's probably about 5%. So that's very reasonable bid-ask spread as far as options go. So what could you do with something like this, right? Well, I mean, first thing that just comes to mind is step one stock trade, right? You could look at that. I would probably be looking at putting my stop loss below this pivot right here, not right at the pivot, but just below it. So I could do maybe 30.25, right? And so now you're looking at about $2 below where it is right now. It's about a 6% stop out. Okay, very, very acceptable, reasonable for a stock trade. Straight option, you would have to do some math on that and figure out, okay, if you got into like a step 2 call, what would we be looking at as a stop loss if it did come down $2 there? That 6%. I mean, that could be a bit more. And are you willing to take that kind of an expense on the option? If that's not acceptable, then there's other things we could look at. You could potentially look at a bull put. What if you did a 30 by 29 bull put credit spread, something like that? What if you did a bull call and you put a very little amount, maybe a 32 by 33? We'll turn that into green right there. Bull call debit spread. Now, we don't have the time right now to dive into all the strike prices and analyze fully what that would look like, but you could look at some different selections there and see if you like what those look like. But that's this is a nice chart that you brought up, so thanks for that, Jody. All right, last one we're going to hit today. Mark is looking for thoughts on GLD or SLV. All right, so gold and silver. So GLD is the ETF, or one of the ETFs on gold, and then SLV, I'll just pull this one up too, is an ETF on silver. Now, oftentimes in the past, gold and silver have kind of acted opposite of the market. And in this case, it isn't. So it's a challenging one, right? Because look at this. I mean, it's just been dropping off. And I hesitate to get bearish on precious metals when the market is going down, because you would think people would want to maybe move their money into precious metals. But looking at this chart, I mean, this is gold, this is silver. Not much of a difference there, right? I mean, did that chart really change that much? They're pretty much the same. So, I mean, can I get bullish on this? No, and that's a challenge for me. Keep zooming out, like, ooh, okay. Look at this, guys. This is very interesting. You change the time frame. I just went to a 3-year weekly chart. All right, so now we're looking at 3 years worth of time. Each candle is a week. Look at this line. So that was resistance way back there in early 2020. With support, and we're right there again now. So if this moves up from here, maybe this could be looked at as a longer term bullish trade. I wonder if SLV is in the same. Okay, silver, not as clean, honestly. The chart does not look as clean as far as that goes. I feel like I'd be forcing it if I dropped a line right there, and then it's already below the line here, right? So automatically, if I'm going to pick between the two, kind of throwing silver out the window, and then I'm going to look at gold here. So this could be one to keep an eye on, Mark. This is a good find. I'd keep an eye on this guy. I wouldn't rush it. I mean, again, I'm looking at a weekly chart. If I go back to a daily chart, that looks awful, right? That just looks awful. But if I can, on the weekly charts, maybe next week get a move up, and then the week after potentially some bullish confirmation, there's some potential in there. But I would want to wait to see that, because if this thing breaks this line right here, and that's a fairly significant line now, if it breaks that line, we could be looking at some more bearish moves. And it's been following the market this year, right? And if the market continues to move down and gold breaks this line, what's stopping it from going all the way down to 137, some of these lows back in here? So just something to keep an eye on, but potentially there's opportunities there to the bullish side if it does what we're hoping it might. So all right, great, guys. This has been great. Thank you so much for being on today. I want to leave you with one last thing before we close. I want to let you know about a webinar, a free webinar that we are offering next week, Tuesday, 11 a.m. Central Time. It is going to be all about our new product called the 10 Gen Legacy. I'm going to drop a link in the comment box right here. That's going to be able to bring you directly to the site, the Zoom site, where you can register for this free webinar, and you can learn all about the 10 generation legacy that we have. And it's all about protecting your assets. It's all about protecting your assets and really creating a legacy for future generations as well. Some very interesting information. I highly recommend that you check it out and let us know what you think. All right, thanks, guys. This was fun being on with you today, and I look forward to next week.